Hi, this is Greg. Thanks for joining. And today we're going to be talking about Warren Buffett's favorite market indicator and how it is now flashing a sell signal. Okay, now we've talked in past videos about Warren Buffett's favorite market indicator. It's also known as the Buffett indicator, which is a measurement of the stock market's valuation at any given point in time. Now, Warren Buffett has said many times that his favorite method of market valuation to look at is the total market cap of the stock market divided by the output of the U.S. economy, which is the GDP. So in order to understand why this is important and why you need to be aware of this, let's take a look first at the basic components of what makes the calculation. So take a look at this chart right here. Okay, in this chart you see basically the two components of the calculation. The first line is the total GDP or gross domestic product of the economy, which is the total output of goods and services for the U.S. economy, which is currently valued at $19.4 trillion. That is the green line on this chart. Okay? The other line, which is the blue line, is the total market capitalization as measured by the Wilshire Total Market Value Index. Okay, these two are the two measurements which are used to calculate the indicator. So in this next chart, you can see you put those two together and divide them, and this particular chart shows you that as of August 14th, 2020, there was a reading of 177.6%. Now this is the highest reading ever recorded going back to the 1970s. And if you looked at some of my previous videos, I've used this chart before, but it was a month or two old now. And at that point in time, it was 146% and change. So just in that short period of time, it's gone from 146 to 177. You can also see on this chart that the low reading in the middle of the chart there was at the 2008-2009 stock market crash as a result of the financial crisis, where the reading was a little over 50%, just to give you some context. Okay, so just to go on here, take a look at this chart. This chart was the March 23rd low of the Dow Jones Industrial Index when it hit an intraday low. This is not a closing low, this is an intraday low of 18,213. Quite a dive. Okay, so now we go from March 23rd up to this past Friday, which was August 14th, and you can see by this chart the Dow Jones Industrial Average closed on 8/14 at 27,931. Okay, that's an increase of 53%. Now it's important to point out that down through history there has never been a 4-month period where the stock market has increased this much. Okay, so what does that tell you? That should tell you a lot of things, because it all happened in the face of horrible economic news, and apparently it looked like Western civilization was falling apart the entire time. So take a look at this chart. This is the NASDAQ. The NASDAQ, as you can see by this chart, hit a low March 23rd of 6,860, right? And recently, again, as of 8/14, hit an all-time high, or is in the all-time high territory, I should say, of 11,019. Now this represents an extraordinary 60% rise from the low of March 23rd. You know, I just can't emphasize how unbelievable these rises are, and it can only be explained by a market bubble, by extreme overvaluation in the market. Now remember, the one thing to keep in mind is, that's sort of difficult to conceptualize, the market can stay overvalued for a very long period of time, especially when the Fed is so unbelievably accommodative, never has been this accommodated before, completely off the scale accommodating, and we'll talk about that a little bit further in a minute. Now, two important things to take away here. The Fed during this period has been pumping money into the system, into the capital markets. It has printed $2 to $3 trillion and purchased mortgage-backed securities, government securities, which it has done in the past, and in an unprecedented step, corporate debt, and in particular, high-yield debt. Now, this has had the effect of putting massive liquidity into the market, and when you simultaneously lower interest rates to zero, as the Fed has done in March, and makes buying bonds extremely unattractive, guess what? All the money tends to flow somewhere, and it flows into the stock market, causing an asset bubble. The other unbelievable thing that I've pointed out in many other videos, stock market trouble ahead and others, is that the stock market is currently completely disassociated from what's going on in the economy. The country has gone through the worst downturn, the worst unemployment situation, the worst economic shutdown. You have riots, you have all kinds of cultural discontent. It appears that Western civilization, it appears basically that the country and the cities are completely coming apart here, but yet the stock market goes up every single day. So I just want to summarize the risks that I see in the market and the reason why I think you need to take this Buffett indicator very, very seriously in terms of protecting your portfolio, protecting your 401ks and your money going forward. First of all, the virus is not going away, okay? So any hope of a V-shaped recovery, as I've said in previous videos, is toast. This is not happening. This is going to go on longer than anybody expected, and the economic impact is going to be more severe than anyone has anticipated. Second thing is there's tremendous uncertainty over the next steps of the fiscal plan, the money that the government is going to be pumping into the economy. As I said on previous videos, the President and the White House and Congress have not been able to agree on a stimulus plan, a second stimulus plan. He instituted an executive action, which will help get money to people and relieve people from getting kicked out of their apartments and things of this nature. But there is still uncertainty. Congress just took off for their August vacation without doing anything, so we don't really know how this is going to work out. I suspect, however, that because it's an election year, we're going to see some form of stimulus coming out to support the economy. I've said time and time again that an economic crisis of this magnitude will inevitably result in a banking crisis. Even though the banks came into this situation in much better shape than they were in 2008, 2009, this impact of the shutdown on the economy is going to have a very profound effect on banks as they write down their real estate loans, which real estate is completely in the crapper, and the impact on the corporate sector, which has been very severe in the industries that have been massively impacted by the downturn. Next, I continue to believe that third and fourth quarter earnings are going to be horrendous, probably worse than most people expect. This is another risk, and when it finally hits, it could impact the market very negatively. And the last point is, as I pointed out before, I believe that there's massive political risk going into the election. Donald Trump, in my view, has been viewed very favorably by the market, and the incredible returns that have been achieved over his presidency sort of prove that. The Democratic ticket with Weekend at Bernie's candidate Joe Biden and his new VP pick, Kamala Harris, I think are extremely negative for the market. And if they were to get elected, along with a loss of the Republicans in the Senate so that they controlled all three branches of government, this would have a terrible, deleterious effect on the market. The market would inevitably go down tremendously, and this is a very big risk in the next 6 months to the market, especially because it's so overvalued at this point in time. So anyway, that's pretty much what I wanted to talk about. Now listen, I wanted to ask you a favor. Please focus now with me. I want to ask you to do something. In a couple of seconds, there's going to be a screen that's going to come up with 2 videos that I want you to watch because they will complement this one and give you more information on some of the topics I'm talking about. One is Stock Market Trouble Ahead, which I referred to earlier. And the other one is called Checkmate, which talks about how Donald Trump basically outpositioned Nancy Pelosi in the stimulus talks, resulting in his executive order. And I touch on a lot of the topics there that will further expound on this and that you'll be interested in. Okay, so thank you for joining. This channel talks about business and investment all in the context of the digital age. If you like this content, please like, please subscribe, and please hit the bell so you get notified. And I'm going to be coming out with a lot more great videos real soon, and I hope you can join me. Thank you.